Okay. Hi, everyone. Thanks to all the attendees for joining. We have our panelists ready and all set to go. Just to give an introduction, this is as part of a series of webinars that M-CRIL plans in these unprecedented times of the COVID-19 epidemic and how is it affecting various sectors of the financial services industry. Today, we are particularly talking about the microfinance ecosystem. Just some house rules before we start. At the bottom of your screens, you will see a chat functionality. You are free to ask questions at any time during the presentation. The sequence that we will follow is we will have a very short introductory presentation, and then we will have the panelists speak. This should take about 25 to 30 minutes. And then rest of the 30 minutes will be spent addressing questions which you raise. So please feel free to use the chat function and shoot across your questions while the panelists are speaking. We'll collate and answer in the second part of the session. So we are all good to start. Sanjay, if you can take up.
Yes, thank you, Achin, and welcome everyone. We have had an overwhelming response to this, which shows the seriousness with which everyone is taking this position. We have participants, many from Asia, a large number from Europe, and a few even from the Americas. So good afternoon to everyone in Asia, good morning in Europe, and I'm not sure exactly what to say to those who are sitting up in the middle of the night to join us, but thank you for being here, and I hope you have a good sleep after the webinar. Well, it's very obvious why we have organized this webinar. COVID-19 has brought the world to its knees with lockdowns, halting almost all economic activity worldwide. So while that economic impact is being felt by all of us, we know that microfinance clients who are at the bottom of the pyramid are already affected with the collapse in most regions of their daily earnings, and field staff who also tend to be from low-income sections of the population are also likely to be affected. So we have to think about their interests also. We can't allow the collapse of financial services at a time when they are most likely to be needed by the low-income populations that microfinance works with. So this webinar is about MFIs coping with physical restrictions and the economic challenges that are posed by the COVID-19 crisis. Just to set the scene, more or less a climate setting exercise. The key issues that we'll be dealing with are on this slide: microfinance continuity, what kind, how will MFI make disbursements, collect repayments, manage liquidity, how can client lives be supported. It's not just it's not just about livelihoods. It's also continuing to just conduct their daily lives in a situation where they may be short of cash. For staff, we need to be sure that we're able, at least for the field staff, to continue to pay salaries in a tight liquidity situation, and how do we enable access to healthcare. So other issues: regulatory forbearance in the economic crisis, exchanging ideas across geographies. We have a colleague from Sierra Leone who will tell us about issues in the Ebola crisis, and we are going to talk about international cooperation also. So we'll begin with Since this is about MFIs, we'll begin with the operational challenges, which the initial discussion will be led by Yannick Liliev, CEO of Chamron MFI in Cambodia. Yannick said to me when we invited him that it's very early stage and that they are still learning how to grapple with the issues. Well, it's the same for everybody. It is the early stage, and it's learning to cope with the early stage we're talking about at this point in time. Later on, we will organize further webinars as the situation evolves. Then we'll have Harsh Srivastava of the Microfinance Institutions Network in India, talking about regulatory forbearance and what networks can do in discussion with their regulators. And then, as I said earlier, we have Larissa Canillas of Port Aid Investment Management. She's based in Sierra Leone and will be talking about the Ebola crisis there. And Jan Posmus talks about how international investors are reacting. Jan is also from Port Aid Investment Management, and we have Abhishek Agarwal from Axion International to talk about what Axion partners are doing to address this situation. So a lot of experience on our resource panel, and we look forward to your contributions, observations, and questions at the end of the resource person's contributions. So I think let's go straight on to the presentation by Yannick on coping strategies for continuing client-centric operations.
Yeah, hello everybody.
Yannick, just before you start, just 1 second. Yeah. I would request Sanjay, you and all of the panelists also to be a bit more louder. The audio quality we have tried to address, but if you can speak in a louder volume, I think it will be better for the attendees.
Okay, sure. So please message me directly in case it's not clear.
Yeah, it's clear now, so please go ahead.
Okay. Okay, so yeah, thank you very much for having me on this panel. As mentioned, indeed, we're still trying to figure it out. I guess as everybody here, it's quite unprecedented. So it's really a work in progress in terms of ensuring that our operations aren't affected too badly from all the different stakeholders' perspective. So I wanted to first take this, rather than going into specific responses that we've implemented, which I'll be happy to discuss maybe later on during the Q&A, but I wanted to take it first from the aspect of communication, because I think this has been, in a way, the key challenge so far that we've had to address. And the first reason why it's I would say, communication issue is the sense that, at least in Cambodia, it's not a sanitary issue yet. It's not an economic issue yet. We have just above 100 cases. We see some impacts economically creeping into different sectors, which are directly or indirectly related to the COVID-19 crisis. But generally speaking, the main issue that we're having to deal with is one of communication. So the first aspect I want to take from a communication perspective is that of change management. So as in any crises, what you have to implement correctly is your change management. And the first aspect to change management is ownership. So internally, you want all of your staff to be aware that there's a concern and to understand that they have a responsibility and an ownership to addressing that concern, and that they're going to be working towards that. So that means that they need to take time out of their everyday tasks towards working that. So as as a CEO, the first thing that I had to build was that ownership across all of the different departments, and I'll talk a little bit about how that's been done. But ensure that people are aware that there's an issue and that it needs to be acted upon, and what are the different scenarios that we're going to work towards. The second thing in this particular context that I found, let's say interesting, is the fact that it's a crisis where it's very hard to determine what the impact is going to be. So we're seeing impacts at many different levels coming out of different ways that this is evolving, which, you know, it would have been very hard to anticipate. So, for example, one thing we've seen is discrimination against Cambodian Muslim population due to the fact that a lot of the cases were imported from Malaysia during a gathering that happened there. So we're seeing that the businesses from these Muslim Cambodians are being impacted more today, and were first impacted due to that. Obviously, that's something that we couldn't have anticipated. So we need to build a communication and a response that's agile. And I think the agility that is due to the uncertainty of this has to be embedded into your communication strategy. And I think that I'll talk a little bit about, you know, one of the examples of how we've done that. And so once you have this ownership, you've built an agile response to the evolving situation. You don't want to take, you know, 1 month revising a credit policy, or implementing a new life insurance, or building a response action plan, and getting approvals for that. You want to be agile in all the ways that you address with that. Once you've done all that, you need to make sure that there's a prioritization that happens in your staff that is there to balance between making sure your business continues in this new context via your communication strategy, and at the same time addressing the crisis at hand. So that change management is the first point I wanted to make relating to communication. The second one I wanted to talk about is about the anxiety of the stakeholders. So for me, there are the kind of 5 main categories of stakeholders. And I talk about anxiety because in a crisis situation, especially with the uncertainty, any small concern becomes an anxiety, in the sense that people are reacting a lot more emotionally. They're going to be transferring some of the concerns that they have. And you see this with staff, for example, directly with clients as well. A lot of the concerns that they're going to have are going to be very emotionally driven. So you need to make sure you understand that and adapt your communication accordingly. So clients, staff, the board and the shareholders, the lenders, and then a kind of external stakeholders like regulator, the professional association, the government, and the media. All of these different stakeholders need to have a specific communication strategy in terms of how you're going to deal with their anxiety about the uncertainty of the situation. What systems are you putting in place that is going to, you know, cover the different aspects and different ways in which this can evolve that is very hard to assess. So I just wanted to that communication strategy relating to that anxiety. And the fact is that you need to tailor that communication strategy to each of those stakeholders. And the main findings I found were 2 things. First thing, there's no such thing as too much communication. You need to be constant in the way that you update people, because the situation is evolving. They're going to be, I mean, I don't know how many of you are in the situation, but you're going to get, you know, daily, if not multiple times per day, requests from different stakeholders asking you to explain how you're dealing with this, how you're dealing with that. So be proactive and don't think that you're communicating too much. People, I think, will receive that very well. The last thing is, don't assume that people assume you're doing what you're doing. So you have to make it very explicit, detail every single action, record it, put it in a document, share it with all the different stakeholders, again, based on, you know, what their anxieties are and where their concerns lie. So I wanted to give just one specific example in terms of you know, putting all of the things I've just mentioned into practice. So we've identified a COVID-19 focal person. So we chose somebody who is a long-standing staff in Shunan, who's well respected, who's in the operations department, so who has that, you know, level of acceptance and respect across the organization. So he's been identified as a COVID-19 focal person, and basically communication has been sent to all staff saying, if you have any concern, direct it towards this CFP. So then what this person does is then each day sends us a list of the concerns that were raised. And in the morning, every morning, myself, the CFO, the COO, and the head of human resources meet and provide a response to each of those individual concerns that were raised by individual staff. The next morning, following that, the response is given to the CFP, and he will then liaise directly with all of the staff. What we then do at the end of the week is take all the material and important or repeat questions that have been raised within this feedback loop, and we update a Q&A document that is then circulated to all staff. And then that way they have an update on how we're addressing the issues. We can also revise that Q&A on a weekly basis based on development of internal policies, for example, with a new life insurance or a new restructuring program or a new relief fund or whatever it is that we're implementing. And just to finish, maybe, what I wanted to highlight was the leadership role here. And the leadership role I found so far is really about managing the balance between the business continuity, so ensuring that you're not overloading your staff with, by giving them ownership of the issue. You're not overloading their work, their capacities in terms of just giving you data, collecting information, organizing their teams, developing new policies. So doing all the crisis management, you're not overloading them with that, and ensuring that the basic functionalities in terms of controlling quality of underwriting, in terms of providing support to the staff when they're facing issues that are not related, there's still the capacity to do that. And that's probably the hardest part in a leadership role here, is ensuring that balance. And again, it has to do with that, change management and the agility I talked about before. So just some things I've learned over the past few weeks, and happy to dig further after the Q&A and to provide any additional information on some of the specific responses we've provided.
Thank you, Yannick. Your emphasis on communication and change management, agility in business continuity, in maintaining business continuity, making sure that everybody is on board with what is happening, not assuming that others know how you will respond to particular situations, making sure that everyone knows what you're doing. These are very useful points for MFI leaders to take away. So can we move to Harsh, please, in terms of what messages you want to convey to the regulator, or even to regulators all over Asia in particular?
Good afternoon, everyone from India. In India, the scale of our COVID impact is a very large scale. First, the sector itself is very large, with 56 million women borrowers who have borrowed about, in our currency, 2.1 trillion rupees. And there are many institutions playing this who are serving the microfinance customers. For us, we have a few set of things that we had to do as an association of companies. And these come around 3 or 4 steps. I will come to the regulatory side a little later, what we told to the regulator, which in our case is the Reserve Bank. What we had to work with our own members, because we are also a self-organization under the Reserve Bank of India. So our first step was to help our own staff, because the other thing that is happening in India is that we're in a complete nationwide lockdown. We are in the 8th day of a 21, or actually it's in many cases 23, 24-day lockdown, where nobody can move and nobody can do anything. So the first step we did was that we had to tell our own members when the lockdown was announced that take care of your staff. Some of your staff might be stuck where they cannot proceed from any place to any place because lockdown means you could not travel. So what can you do to support your own staff members, or can one company which has a local office somewhere can it support the staff member of another company in that same locality, because nobody could travel, nobody can do anything. Second thing that we addressed was for our customers. What we said was that we have said was that for customers, they should be given, because the Reserve Bank of India has announced a moratorium. So first we said, don't collect at all, because he said that it is impossible for them to collect. So that was the first step of action. The second thing that we did for our customers, we said was that if you have our field staff, which also numbers more than 150,000, they should be in touch with their customers and inform them about the health challenges, and also to inform them that there will be no collection taking place now, but they should save the money and we will collect it later. So this was the set of activities we did last week. Then we also did, we went to the regulator and asked for not just a moratorium, because we were going to be anyway giving a moratorium for our members. We said it for the lenders to microfinance institutions, which are primarily banks and other kinds of finance companies. We said that.
Harsh, just 1 second. Your camera is not, I mean, your face is not in the center. Can you move it a little bit? Just.
Sure.
Yeah, now it's much better. Now you're.
I actually cannot see myself in this, unfortunately. If I could see myself, then I could see where I am looking. I can only see this.
Yeah, now it's much better. Now we can see you. So yeah.
So, so that was the to regulators. We reached out to the regulators asking for a moratorium from our own, from the lenders, and we reached out to the government as well, saying that this is an important issue. The government of India listened to us, and the Reserve Bank of India announced, which is a regulator, a moratorium of 3 months for all term loans. So the loans that we have taken, our members have taken from banks, would be entitled to a moratorium, and we in turn would have to give a moratorium to our lenders, to our borrowers. So that was one set of work that we did last week, and that resulted in a the government announcing this. And what we were very pleased was when the governor of the Reserve Bank of India made his announcements, he explicitly and for the first time mentioned that microfinance institutions is one of the classes of lenders in his speech. He talked about non-bank finance companies, that is shadow banks. He talked about housing finance companies and banks. So it is that was one thing that was very useful for us to give us, the Reserve Bank had heard our concerns. That was last week. Now what we have realized is we need to do more things. So first, we are again going back to our staff. So what we have sent to our members is a set of activities that they can do. They can work with their HR departments, the staff, which is updating them on training, helping them think about what they could be doing, setting their own goals for the next year. We are sending out some training modules that all staff can use in their spare time to update themselves. The second thing is going back to the borrowers, and for them, they're again putting out a set of standard communication that our members can use when they call up. This is what a moratorium will mean to you. These are the pluses and minuses of repaying your loans now, because the interest is still accruing, even though you don't have to pay. So we are explaining, we put out the standard set of communication, which we also have to translate into multiple languages and send that out to our members. This is what they can use. The third thing that we are doing is many of the lenders to our members, that is the banks and financial institutions who lend money, they themselves, while they're allowed to give a, a moratorium to us, all of them haven't yet given one. So we wrote letters and emails, to 135 lenders of our members saying that, now that you've been allowed by the Reserve Bank, do please extend the moratorium to our members. And they've got some feedback about some questions that the lenders have. So later we then went back and we had a discussion today, some of our members, how do you apply for the moratorium from the banks? What are the requirements you need to prepare, which is, for example, an approval that you in turn are going to be giving the same moratorium to your borrowers, some documents you need to have. So this is the role of supporting the microfinance companies financially, and through the regulators, through their customers, and through their employees are the 4 key roles that we as an association have taken. There are also questions that we have to, the media is asking questions because microfinance is a very large sector and now well covered in the business media. So we're asking questions, how are you dealing with this? What are your challenges? Responding to the media. There are many other investors because some companies are listed on the stock market. So mutual fund, other investors, there'll be a conference call with some of them tomorrow. So we are trying to reach out to, other such stakeholders about what the concerns they may have. Another category of stakeholders are provincial or state government.
Hello, Harsh, unfortunately, we have a fairly stringent time limitation.
Sure.
It's been very, very useful hearing from you about what MfIN is doing.
Thank you. I'll stop right there.
Thank you, Harsh. I think MfIN has played a very active role. This is a very busy time for you, and it's been great hearing about all the measures that you've taken. There's still a little bit of confusion about the moratorium, and I'm sure you will play an active role in trying to get some of that resolved, but we can come back to that in the discussion segment of this webinar.
Thank you very much, Sanjay. Happy to answer questions.
So let's move to Larissa, Senior Investment Manager of CORDAID. Larissa has experience of the Ebola crisis in Sierra Leone. It will be interesting to hear about their experience in handling that.
Okay, thank you very much. Can you hear me?
Yeah, yes, Larissa, can you turn on your video, please?
Okay. Yeah, so thank you for having us here. And I am here to share to you the lessons from the Ebola crisis, and maybe just to give some background and context. CORDAID Investment Management is the investment management arm of CORDAID Foundation based in the Netherlands. And we are a microfinance investor since 1997, and we are active in Africa, Asia, and Latin America. CORDAID has investments in Sierra Leone in West Africa, which is one of the 3 countries that was affected by the Ebola outbreak in 2014 and 2015. Now, the difference between Ebola and COVID-19 is that you get infected by Ebola by touch, or when you accidentally touch the fluids of an infected person. COVID-19 virus, however, is easier to get. So it has a faster infection rate than Ebola. Now, Ebola, however, has a very high fatality rate, about 50%. Now, in terms of similarities, during the Ebola crisis, we also experienced quarantines. We had lockdowns, border closings, and ban on trade fairs and market days, which are what we are experiencing right now. However, since it was not easy to get Ebola unless you had a physical contact with an infected person, our lockdowns were not as prolonged as we might have with COVID-19. For example, not all districts were quarantined at the same time. We just had a nationwide lockdown for 3 days straight at a time in order for the authorities to check house to house, to do surveillance of sick people, and to take them out to the treatment centers. Then we will have a month or 2 that we can cautiously resume activities before another mandatory lockdown will be declared. Now, when a district is quarantined, we were still able to move within that district, but you cannot go out or go into the district. So trading and economic activities can still continue within that quarantine district. So I think you can imagine that it is still possible to have some form of MFI operations. In Sierra Leone, most MFIs continued to operate in varying degrees, and only one MFI closed operation for 8 months because it had many international staff that it had to evacuate out of the country. So most MFIs continued disbursements in low risk areas, and then some stopped disbursements in high risk areas or where government measures were very stringent. Now, Sierra Leone was in crisis for a period of 19 months before WHO declared us Ebola-free. But we have about 6 to 7 months of intense measures and restrictions. Now, Cord8 sponsored a study for the microfinance sector in Sierra Leone while the crisis was still ongoing to assess and monitor the impact of the crisis on clients and MFIs. And so we found out from the study that at least 50% of the clients surveyed reported 35% to 70% decline in their incomes. Before we reached the middle of the crisis period, the weighted average portfolio at risk greater than 30 days of the MFI sector reached 22%. And I think it went close to 30% at some point after the study period. And majority of the MFIs saw their operational sustainability fall below 100% as compared to the same period prior year. Now, what are the major lessons we learned from the crisis? Number one, take good care of your staff, make them a priority, give them very clear guidelines on what to do and what not to do in terms of work activities and personal safety. And continue to pay salaries even when you will close. You know, show that you care, and it will make them loyal and will continue to do or to volunteer extra work despite of the crisis. And management team, the crisis management team will have to meet as often as necessary to review the business continuity plan and to come up with new guidelines or adjust the guidelines as a daily situation will evolve. Now, when there is a prolonged lockdown, I think we learned that it was very important to continue to have some form of communication and engagement with clients. Loan officers can keep in touch with clients by phone, and loan officers can phone group leaders, and group leaders in turn can keep in touch with their members. During the period of crisis, it will be good for the MFI's reputation, not to press on collections so much, but to show care and concern first and foremost. The MFI can make use of the phone calls of loan officers to inquire about client situation and to collect information, such as how many clients were infected, how many died, are family members infected, well, are there family members who died, household earners who died, how they are coping, what are their coping strategies, are they still able to do business, are they still able to sell? When there is a lockdown, it can't be helped, but you can do some information gathering. There's just no choice at times, but to be lenient on collections. Of course, essential staff might still be requested to report for work, especially those that will attend savings deposit services. So either you will have reduced open and service hours, or there will be rotational duty. Then if you decide to continue loan disbursements, enhance your credit approval process. Say you might have to have a higher level authority than normal to approve loans during this crisis period. Also, classify loans as high risk, medium risk, and low risk in the context of the crisis. And for liquidity management, prioritize loan disbursements only to those that could really work during this time. Also, note that there will be business opportunities that will emerge during the crisis, and some clients will apply for a loan to be able to take advantage of these business opportunities. Now, what lessons did we learn during recovery, or once it is safe to go out and to resume field work? Come up with clear guidelines to loan officers on what to do and what to say to clients in terms of collections. Maintain the client protection principles, especially maintaining responsible and appropriate collection practices. Suggest some statements to loan officers. Do not leave them to formulate their own actions and statements to clients. You can get reputational problems and bad media if you will not be careful. Also, let loan officers assess first the cooperation of clients and their business or financial situation. Tailor the collection approach according to clients' situation. From our experience, MFI clients were given time to recover and to catch up on loan payments. What really worked was when MFIs fully resumed loan disbursements again, and more clients were encouraged to catch up on loan payments so that they can borrow again. We also learned that clients employ several coping strategies that help them bounce back. Your role as an MFI is to show that you care and that you are a reliable long-term partner for them when the crisis is over and when they need their loans again. So I think I will end with that. Sanjay.
Thank you. Thank you, Larissa. That was excellent and very practical advice emerging from your experience in Sierra Leone. And I'm sure our MFI participants in this webinar will have heard you very carefully and taken your messages about caring for clients, caring for staff, making sure the messaging is clear, making sure everybody feels that the MFI works in their interest rather than necessarily its so we'll move on to Jan Posnes, if you would also Jan, if you could tell us about the reactions of international investors. I'm sure we'll be interested in hearing that. I think
Yeah, Jan, you can go ahead.
Well, to start where Larissa finished, she was saying that the MFIs needs to be responsible towards its clients. I think the same is for the investors. They also need to be responsible and supportive to their clients. What we see as an investor is that it's positive to see that there are sector initiatives. We have been part of discussions of the NPM, the Netherlands platform Microfinance, where we seek to a common understanding on how to manage the crisis, and also at European level, which is led by Grameen Agricole in France. There are also discussions going on with about 30 European investors. So those are positive signs. I think in general, the message is that we are and remain committed to the emerging market of the financial inclusion sector, and that we will also work together as funders to support financial institutions and their clients, and where we responsibly can, both in terms of capitalization and liquidity challenges that institutions might face. And of course, it may differ from country to country. We have seen from the presentations that in India, with the complete lockdown already in place, and that may continue for quite some time, that there is immediate pressure, whereas we learned from Cambodia that it's only in the starting phase. So it's really on a country to country and maybe even on a case to case basis, because we also see, for example, in Myanmar that one state has declared a complete lockdown, whereas in other states it's different. So even within countries there might be different measures. But as investors, it's very clear that we all will remain in close contact with our investees, and that we are committed to refinance existing exposures where this is feasible, of course, and also within our mandate requirements. As you may know, some of us are also, some of the lenders are fund managers, so they also need to communicate with, again, their investors. And it's important to keep those communications open so that their understanding of our investors also will help us to support the desired outcome and the resilience of the assets in which they have invested. I think it's all very important that the investors, that we make sure together that we do not exacerbate the crisis by negatively impacting the available liquidity of financial institutions. I think that's important because what we may see is that during the crisis, maybe the liquidity requirements may be a little bit lower because of suspensions of disbursements, etc. But hopefully after the crisis, we do not yet know how long it may take, but it may take a little bit longer than we expected. But that we as investors are also ready to have the liquidity available as soon as the crisis may be over. Because what Larissa also mentioned is that after the crisis, the clients, most of the clients, that was the learning from Sierra Leone, are committed to catch up with payments, but they also need, again, liquidity to start up their businesses. So we as investors should also be committed to be ready to infuse new money as and when it is possible again. So for Cordate, we have also, in alignment with the discussions we had with other investors, indicated that we will mainly focus on supporting, of course, our existing investees, and that we deliver on our contractual obligations. So if it's committed but not yet disbursed, we will also deliver, but of course we will also look on a case-to-case basis, because maybe lower amounts might be required at this time, or maybe more staggered over a period of time. So we also, of course, have a pipeline, and that means that for those who are new investors, that we unfortunately need to review the situation, because we primarily focus on existing partners and existing investments. So therefore, we don't want to raise any expectations with regard to new pipeline partners. And of course, we have intensified monitoring of our existing partners, and we are flexible in serving our clients, but again, on a case-to-case basis, and see where it's needed and required. Okay. I think that's it in a nutshell. Yeah. Position. I think it's good to keep the value chain, alive along all the partners in the chain.
Yeah. Thank you very much, Jan. I think your message about investors also taking a responsible view of the situation and understanding the liquidity challenges of MFI is a very important one. For all the other investors. My concern is that we have seen in the past that not all investors are quite as responsible as Cordate.
Yeah, thank you. But I hope that I've also been clear that luckily discussions at different levels are taking place, and that we want to come with as much as possible with a joint approach. Okay, that's good to hear. Let's go now to Abhishek Agarwal for some thoughts on how Axion International Partners are managing the situation.
Thank you very much, Sanjay. Good afternoon, everybody. I'm Abhishek Agarwal. I hope everybody can hear me okay.
That's fine, Abhishek.
Fantastic. Thank you. So I'm Abhishek Agrawal, Chief Regional Officer for Axion, working in Asia region. And Axion is a global not-for-profit working towards building the sustainable and best-in-class financial services institution with the support of investments and our advisory work through GLAS. Now, we being a global organization, and this is unprecedented what we all are seeing. So we had to really work and be prepared at a global level. Now, I think what I'm here to share with all of you is how we have been trying to understand this and how our portfolio companies are trying to respond to it. As all of us acknowledge and has already been said, this is unprecedented, and we all are learning every day as the situation is evolving, as we all are getting information. I think the we all are trying to evolve through this, through our learning. And learning is very, very important. And I appreciate, Sanjay, you organizing this webinar, because through the learning only, by sharing and exchanging the ideas, what we have from each other, how one company is facing, struggling, or coping with the issues, or how one geography, given this has been at a global level, as we share our experiences from one another, I think we can stand together and we can fight this out. What we did immediately as Axion, given that we had to handle it internally, given we being global with the limited staff spread across 36, 37 different countries, more than 100 plus portfolio companies, we had set up kind of COVID-19 task force with the senior leadership team. And we started engaging not only with our staff taking care of it through the constant communication with the internal teams, but also going out there, having the conversations with our portfolio companies, with our partners, could be investee partners, could be non-investee partners. Because as Axion, we engage through our advisory work with a number of non-investee companies. So we started having conversation with our companies from very early stage. What are they doing? How are they doing? What is it? What we are seeing? How can we help them? And in these types of times, having those conversations, having those clear communication, as it was mentioned in the beginning, is very, very important, very helpful. What we have also been seeing, and like, while this is still very early, given the lockdown, we are already 10 days of lockdown in India and globally, while China seems like China has been through it, but rest all other places we are fighting it out. We are struggling with it. In India, I think from an economic loss perspective, this is still very early. We all know there is going to be a significant impact of this, and we all, being the financial services industry, whether the investors or the investees, the portfolio companies, we are at the front of this. We, not in terms of the health and other services, but to give the economic stimulus, to ensure that the livelihood continues post this crisis. We are going to be at the front, and we need to make ourselves very well prepared to ensure, as we are going to reboot the life, we are going to reboot the livelihood, we are all out there ensuring that through the appropriate products, through the appropriate processes, and how the business models evolves, we are out there to take care of our clients. I think it was already mentioned into the beginning, from the communication perspective, from the product development perspective, it is very, very important that we all evolve and we establish ourselves with the constant communication to our clients. And this is what we are finding across our portfolio companies. We are advising to our portfolio companies that be out there as a leader and have the conversations with your clients, with your staff. Encourage your staff to be in constant touch with the clients. This 21 days of or 24 days of lockdown is going to help you in establishing the communication. Otherwise, generally you are on the treadmill, disbursement, collections, other businesses. This is the time to take a pause, go back to the client, give them the comfort, assurance, you are there, you will take care of it. If there is any situation, any emergency in the family due to health and other stuff, they should come back. The other thing which is what we have always been emphasizing, but somehow everybody happens to take it for granted, the BCP, business continuity plan. Lockdown came all of a sudden, while I think we were all anticipating, but very few companies were ready for the lockdown and being prepared to work from home. There were very, very few. In the past, microfinance business has always been be out there, be in the field. Out of 10 hours of your work, 6 hours you are out there. So this is when the when the lockdown has been implemented, everybody had been struggling. Okay, what do we do now? How do we ensure that we are able to even operate from home? So BCP, business continuity plans, are very, very important. The institutions needs to put in the efforts and emphasis. And we saw some of our portfolio companies who had already started testing well in advance. The BCP is in place. They were able to switch immediately post 12 a.m. midnight when the Prime Minister Modi announced the lockdown. they were immediately able to switch on and start engaging with the clients, having the conversations. I think the other thing is which is very, very important, that Harsh and team through the mfin are already working on the moratorium through the conversations with the lenders and investors. But I think, everybody would have a different view. International investors community does not get the effect of the moratorium. Collections are not going to happen from the client. So I think we all together need to figure it out in this, that while there is this whole chain for the repayments, but what is it which can be done in order to restructure, offer the appropriate moratoriums to the client, and in turn have the proactive conversations with your lenders to get those moratoriums structured so that you are able to offer it to the clients and rebuild the life and the institution. I think we also need to see this. Every crisis brings an opportunity, and we see this whether if we refer back from while Axion has seen it over the last 58 years in different ways, but I would restrict this from an India perspective. If we look at even Andhra Pradesh crisis, it gave us few lessons in terms of process stabilizations, in terms of the credit bureau side of it. Demonetization again gave us few lessons to look at more and more from digitalization. This COVID-19 crisis is also going to give us the opportunity. I think we need to, in the past, the view was that no, we need to be always out there, we need to be in the field, the business can only happen from the branches. This is all giving us new learnings that, okay, things can operate even digitally also. You can look at it, clients' behavior. I think, if you put the appropriate measures in place, things can get worked out. I know the time is limited, so I will finish it up by putting the last point there, which is we find very, very important. I think in the time of these crises, the leadership is and how you are demonstrating the leadership from a CEO's perspective, the senior management perspective is very, very important. You've got to be out there on the front, ensuring your staff, I don't mean that you got to be out into the field, but communicating enough to your people, is showing them that you are standing with them in these hours of crisis, and together you can find the solutions, giving them the assurance. I think in the early hours, this comment was already made, that anxiety and emotional assurance is very, very important in these. And as these pass down, we all are very resilient in nature as a human species. So we can always all fight it out and rebuild it, but demonstrating this from the front is very, very important. We as Axion continues to be very, very committed into the sector. We are taking a stock of our existing portfolio companies, as well as our in conversation with the DFIs, like-minded partners and investors, to see how we can reinforce the support in the sector at the global level. We'll take a stop there, Sanjay. I know we are running over time, and we'll take questions and answers accordingly.
Yeah, thank you, Abhishek. Some very very useful tips from Axion. Particularly I think the CEO demonstrating that he or she is in charge and taking the lead on a day-to-day basis is extremely important. Let's move to the question and answer session. Ashwin, you have some questions for us?
Yeah. So I'll ask all the panelists to switch on their video. Sanjay, if you could stop your share screen, then we'll take the questions.
Yeah.
So I think just a housekeeping announcement first. We'll extend the webinar by about 15 minutes so that we have some time to take in questions, and we have about 25 minutes then for the questions. Right? So Sanjay,
there are one more point I wanted to make. We may get to the stage where people start leaving before we actually close the webinar. So I wanted to say at this point that M-CRIL would welcome from all participants feedback on the format and content of this webinar, as well as feedback on the duration of the webinar. we will be publishing a summary of the discussion during the webinar, which will be shared with all participants.
Okay, yeah, Sanjay. So there are a bunch of questions around liquidity for MFIs. That some central bank measures have happened in India and a couple of other regulatory measures in other country. But is that sufficient in terms of how MFIs will handle the liquidity once we are out of the immediate crisis period? Bunch of questions around that. So, or does the regulator need to do more, or can the MFIs prepare themselves better in terms of managing their liquidity once they come out of this 2-3 week immediate crisis period?
Harsh,
Yes. Certainly, Sanjay. So liquidity will always be a challenge in the next few months, because even if your borrowers, the lockdown lifts and your staff can go back to the field, as they say, the borrowers may not have enough money in the first few weeks themselves to repay everything that they could. So in the next 1 month or 2 months, you will certainly have a challenge. In addition, in India, at least because of the moratorium that has been announced, so there will be very few borrowers would be repaying. In fact, we've said do not repay, and in turn we'll be getting the back-to-back requirement. But the challenge will be when the moratorium lifts, that is in the month of June, where things have sort of hopefully got back a little bit to normal, and there will be a pressure to collect, pressure to pay your staffs, pressure to repay the installments from your own or people who as a company have borrowed the banks. So the challenges will be fairly tight in June and July. We don't expect much challenges in the near future if all the lenders give the moratorium too. That is, the banks and NBFCs who have lent to MFIs give a moratorium, then they will not face a challenge. But if they might face a severe liquidity challenge in the next 1 or 2 months too, apart from the future challenge they can expect.
Okay, Larissa, any feedback from the Sierra Leone experience?
Yeah, so I think that, of course, you have to manage your liquidity every week, I think, during time of crisis, or every 2 weeks, whatever is applicable to you. And you have to, look at your cash flow planning, cash flow position. And of course, if you want to continue some disbursement, of course, there will be prioritization, and just proactively assess the markets on which activities can still be viably supported, and prioritize good paying clients as well. Those who have recently fully paid and then they want to borrow again, provided those businesses could still work. And of course, you will start engaging with your lenders, with your funders. And if you have special projects, funds that were set aside for some capital expenditures or some other special projects, you might have to review them, set them aside first to help you with liquidity. And yeah, I think during our experience in Ebola, the international community, of course, was in solidarity, and I expect that the international community, especially multilateral donor agencies, will be in solidarity with poor countries, low and developing countries. So there will be possibly some economic recovery funds later. So MFIs should be proactive in engaging their external relations within that country, how they can participate with economic recovery, because it is proven that microfinance will play a very important part after the crisis as part of total overall economic recovery.
Sure. So can I ask you in that context, at the end of a lockdown in a particular district, is there a substantial increase in demand for funds immediately, or does it take some time to come through?
I think that it will not be very high immediately, because of course most MFI clients will still have to will still have to reassess themselves and position themselves again. There will be demand from those who have fully paid already, but were stuck or were unable to get their loans during the period in which there was, a moratorium, or I mean, when they were MFI stopped dispersing. Those demand will mainly come from those clients that have fully paid already. Now, in terms of emergency loans, I think that the MFI, especially using your own funds, continue to assess using your normal strong policies, strong credit policies, in order to assess client situation and their capacity to pay. And when you have some concession now from your lenders and donors, as well as from government, there will be some emergency funds, that you can then relax a little bit, but still, try to adhere to best practices as much as possible.
Okay, thank you. For those who don't know about this, there's an excellent document on guidelines emerging from the lessons of the Ebola crisis, which is published by CordAid, I think, Larissa, is that right?
That's correct.
Yeah. So we will include in our documentation the reference to that document. Achin,
Yeah.
next issue.
So yeah, the next, there's a set of questions about the role of tech. While some people are pointing out that probably technology and digital payments or digital collections can help tide over some of the crisis and the issue of reaching out to clients in the field. Others are pointing out that collections is quite difficult. Is tech really ready? Changes around according to country context. So if the panel can comment on that, what role does technology and digital payments have to play in this situation?
Can we get your feedback on that first, please? Hello, Abhishek.
Yeah, sorry, Sanjay. Yeah, we were not clear who were you asking this. Thank you. No, sure, Sanjay. So I think, to answer this from a tech perspective and the client segment with whom we deal with, especially at the bottom of the pyramid, I think we are never going to be ready. No matter, I think this is right now a crisis situation. India has seen the similar situation back into the demonetization days as well. And all the tech companies, all the payment platforms companies had been trying it their level best, but they weren't getting any traction. So I think, we always have to see in the time of these crises that how we can enforce this, given we are all habituated to a certain behavior, and this is always about the cash economy. I'm not saying by any means that you can eliminate it and immediately digitalize it, but every time some of these type of things happen, you have to take it with that pinch of salt and then try to force upon on it and see how much you can do that. When this is about the business crisis, you are not able to do business, you start to tend to figure out the ways. I think we are already seeing post the demonetization days that how clients have started to use the bank accounts again. Some case, not 100%, the disbursements had already moved to the bank accounts. Earlier, if we talk about 2-3 years back, even disbursements were not happening. So I think we will have to take it case by case basis. What is very, very important, just the tech should not be thrown on them. We will have to invest into it. We will have to engage with the client, make them understand. And these are important times. I think people tend to adopt on those. Then if you let these slip away. And we are seeing this across the portfolio companies, because interestingly, we have traditional companies as well as we have the fintechs of the world. So fintechs have always been adopting it very easily. But in the traditional set of companies also, we are seeing that those companies have been picking up the conversations and trying to looking at implementation of some of these in the next 3 to 6 weeks.
Right, thank you. Yannick, any thoughts on the use of technology to facilitate transactions at a time like this?
Was that for me?
That's right, yes.
I saw a funny post saying, you know, what's driving your digital transformation, your CEO, your CTO, or COVID-19. And I think it's definitely now being used as an opportunity to, first of all, get those resources in place that you need to invest in terms of various assets, teleconferencing equipment, whatever it is, to drive that communication across the organization. So this is a good time to do that and to roll these processes out. As far as from the client perspective, I think you know, what was just mentioned is that dealing with poor, often at least digitally illiterate population makes it very difficult, and also depending largely on the country context. So in Cambodia, actually, the network of mobile payment agents capacity to do bank transfers, to disburse, to collect payments via these networks, even in quite deep, you know, down rural areas, is pretty much there. And with the developments of mobile wallets and the penetration of mobile phones, actually, you can really get a deep penetration of cashless digital transactions if sort of the barrier is not about that infrastructure. The barrier is really about people's engagement with those technologies, capacities to engage with that, and you can do a bit to address that. So we're doing as best we can we're currently doing, so we've upped the mobile phone credit of all our officers so that they can spend more time on the phone with with the clients, and ask them first of all if they would be ready to test the M payments for their reimbursements, and if not, what barriers do they face in doing that? All of the M payment providers currently have made it free to do it from your app to whoever you want to send it to, so you can do free transfers, but the buy-in of that technology is very low. People's understanding of how it works is very low. So there's a lot of education that needs to be done, and obviously not doing it face-to-face is a big challenge. So I think, you know, wherever we are now, we can do some things, and like I said, it's around 50% of our payments that are done through that. We can maybe up it to 60, 65, but it's probably not going to go much beyond that. We do have a lot of plans in place to up that anyway, but as in a crisis, fast responder, it's going to be challenging.
Yeah, thank you. Ajin,
yeah, Sanjay, the next set of questions is about the role of the regulator. While in India, the regulator has taken some steps in terms of extending a moratorium, many of the attendees are asking, does the regulator need to do more for helping the MFI sector in terms of liquidity, in terms of providing lines of credit? So what, is there something beyond? And in some geographies, even regulatory measures like a moratorium or a forbearance has still not been initiated. So the broad question is, what is the role of regulator, and particularly in countries where a moratorium has been announced or some forbearance has been announced, does the regulator need to do more?
Jan, is there any feedback on this from co-aid partners?
Regarding?
Regarding what regulators are doing in different countries, and what additional measures they can undertake to make life easier for MFIs and also for MFI clients.
Yeah. So it really differs per country. In Myanmar, there is quite the regulator is quite invisible at this stage, whereas like in India, the regulator is much more on top of things. In Vietnam, it's also quite they're quite on top of things. So it really differs per country, and also for us as an investor, it's really good and important to know what's happening in the country, and then judge it on a case-to-case basis. Right. But it's important that of course, that the regulator, that you have an active regulator who knows what's happening in the sector, and can think along with the MFIs, and most of all, to think along what is in the best interest of the clients, their citizens.
Of course. Harsh, anything you'd like to add to that?
So while of course we are grateful for what the regulator, the Reserve Bank has done in India so far, and that is across the board for all borrowers. So even your home loans and car loans will benefit. In the case of microfinance, yes, there is more that could be done, which is now more not so much in the regulator case, but perhaps the financial institutions. If there can be some kind of a fund that will support the emergency liquidity needs only of microfinance institutions, that would therefore be able to not just tide over the immediate crisis, but support the liquidity that might be needed when the operations resume. So yes, there is always more that can be done. But the first question is that the actual forbearance that we can get from our lenders is first step. That is to what they should already be doing, they must do. Second stage is, of course, that is there anything more that we can do? And yes, we believe there is always more that can be done to particularly to support the so that when operations resume and business resumes, there could be a jump in demand. And at that time, there is sufficient liquidity to support that jump in demand.
Okay, thank you, Harsh. Achin, we're coming to the end of our...
Yeah, I think we have a question from one of the attendees at Blue Orchard, which kind of nicely is a nice to have question at the end, where they ask, is there a silver lining amidst all this pandemic threat for the industry?
Yes, I think that's a very interesting question. I saw that on my screen earlier. So let's just give each of our resource persons 30 seconds to tell us about silver lining emerging from this pandemic. Harsh.
Okay.
Okay, Larissa,
Larissa.
Please go ahead.
I am very tempted to say absolutely there is a silver lining. I mean, as far as my experience with the Ebola crisis, we were able to recover. Most MFIs in 1 year or less, they were able to bounce back. And the clients too are amazing. They will employ different coping strategies in order to bounce back. And I think our the court aid has that impact study published in FinDev, and M-CRIL will also share it. But we have stories there of resilience and what clients did in order to recover. So yes, I think there is a silver lining.
Yeah, thank you. Harsh?
So there are actually many silver linings. The first silver lining is that our industry as a whole is come together. And working together, the big and small players are working together to help each other. Our staff is working together to support each other. So that is the sense of solidarity amongst different companies and their senior management and their staff is very high. The second silver lining for us is that it gives us a time to pause and for all of us in some sense to recharge our own thinking and our own batteries. What do we want to do? As somebody was saying earlier, there's a constant treadmill of disbursement and collection. So it gives us all of us the time to pause and rethink about, especially for the field staff who get in some sense some time off. And the third silver lining is that we are all learning. We're getting a time to learn from each other. That's what I would like to thank M-CRIL and all the other participants, that we can learn from each other, see what we can do. So again, while we have daily crisis and we're working from home, we're also able to use some of this time to see what else can we do. For example, if nothing else, we've all become masters of Zoom, which we never even knew existed 3 weeks ago. So all of these are therefore small silver linings. They can nowhere near measure up against the immense distress that tens of millions of citizens are facing and will continue to face for some more time, but silver lining.
Yeah, so learning from each other is the very purpose of this webinar. Jan, any thoughts on a silver lining?
Yeah, 2 points. In line with what Larissa is saying is I really hope that the clients will continue to be the central here in this crisis, that we listen to the clients, that we look at the clients, that we also learn from their coping strategies, and that we build everything around that. That's first. Secondly, I think this will be a big boost for cashless payment within the MFI
Yes.
sector. So I hope it gives a good boost. It's not only for efficiency reasons, but also for sanitation, sanitary reasons, etc., like in this crisis.
Right. Abhishek.
No, thank you very much, Sanjay. I think, you know, every crisis of these likes, we have to always look at the silver lining. Otherwise, there is the end of the world. So like that, we have to look at this also from a silver lining perspective only. And I think, you know, in the world of competition, as Harsh already mentioned, that this is showing the solidarity. So what this is very, very interesting. I think learnings, in the competitive world, we are standing together and looking at how do we resolve this problem. At a global level, solidarity has come. Forget the neighborhoods, the community, at the country level. At the global level, we are standing together to fight this. I think from the MFI's perspective, I see there are a lot of opportunities, silver linings, which I'm seeing. Some of it has already mentioned by my colleagues here, digitalization. I think new way of doing business, and the most important, the touch with the client, which was missing. We were become more like a machine. Disburse, collect, disburse, collect. There we are establishing the touch. And I know, Sanjay, back in the days, you have been a big advocate about it, that please look at the client, you know. So I think that's what we are looking at in these 21 days of lockdown. What really client is expecting from us, and then restarting and relooking at the businesses. The one additional point I wanted to make, I think, from a liquidity perspective, which some people earlier asked was, I think from a liquidity perspective, this is going to be challenging because this is a meltdown, economic crisis are going to be there. But as you all financial institutions across the globe will go in renegotiation with your lenders, please buffer up some time to recycle your capital, which hopefully you will collect from your clients. You know, this is not a straight ALM match. I think it's that recycling of that working capital, which will be very, very important for that economic stimulus to give to your client. So keep that in mind and work with your clients and with your lenders, investors. Thank you very much.
And Yannick, final word on the silver lining emerging from this pandemic.
Yeah, it's I'm a little bit reluctant to talk about silver lining in the sense of the gravity that we're facing now from a sanitary perspective, with economic downturn and all. You know, it's going to be a tough road ahead. But I think it's nice it's good to play that game, and also to kind of, you know, keep that positive note. But I think, you know, this is going to be a real test of the whole value chain of the microfinance industry, of how they are structured in a way that can really, or not, show that it is client-centric, that it is responsible, and that it is putting the livelihoods and the concerns of these poor families above everything else. Because bottom lines are going to be hit. Lenders are going to face high risk and pressures from their funds. Shareholders, management, down to the loan officer who's got his incentives. How do we structure now the whole you know, sector in a way that demonstrates that we are responsible? How do we all work together towards that? Let's come together and put our minds and make sure that, you know, some of these actors, key actors down the value chain, aren't actually you know, driving us to practices that are going to be very harmful. So I think it's a good opportunity to really test ourselves there and refresh that aspect of our work. And then you know, more pragmatically, from a digital transformation, I mean, yes, cashless payments, but e-learning, teleconferencing, you know, distance management, all these different tools that we have in mind to put. Let's use that as an opportunity to roll these out and make them work.
Thank you. I see that our chat box is very active indeed. I would encourage all participants to write into us with your comments, not only about the webinar, but on various topics that were raised during the webinar. We will, of course, take all of these into account when we prepare our document, our feedback document on this event. So we look forward to seeing all of you again, and let me end by thanking all our resource persons for giving their valuable time for this. I hope that the purpose of sharing information, exchanging experiences amongst amongst the participants has been served, at least to some extent. We expect to organize more webinars during which we hope to take this process further. So thank you all very much, and bye for now, and good luck in your work in this pandemic.
Thank you. Thank you.
Thank you very much, Sanjay. Thank you very much, everyone.
Thank you.
Thank you.
Thank
Great
you.
points, Ray. Thank you.